Good morning. It's Jeffrey Christian of CPM Group. It's 9:40 here in New York on Friday morning, the 5th of September. The jobs report has just come out and it's extremely pessimistic, where jobs were around 73,000 created earlier. In the most recent month, it's 22,000. Unemployment's around 4.3%. Pretty much settles in on the idea that we will see a rate cut at the Fed this month. The Fed Watch contract is now 98% for a 25 basis point cut. And there are some people saying, well, maybe we'll see 50 basis point cut. Our expectation isn't there. It's a lot to cover, a lot of things happening in the markets. Talk about what's going on and what comes next. I have some data on silver. September is a active contract. Chinese platinum imports, we'll update you on that. And then a couple cautionary notes for investors at the end of the presentation. So gold was trading significantly lower until the jobs report came up. It has spiked up about $33, and it was trading $3,640 just a few minutes ago when we were finishing up this presentation. Our expectation has been that the price was going to rise. If you go back into our precious metals from June, July, August, beginning of August, we were saying we thought we could see $3,500 by the end of August and $3,600 at some point in September and October. We hit $3,500 on the 29th of August, the last trading day of the month. And then the price spiked higher and it has gotten over $3,600. It has come off a little bit in the recent days, but it's basically trading around $3,600. Our longer term expectation continues to be that you might see the gold price get as high as $4,000. The way we look at the markets is we say, what has been driving the prices higher and what is the outlook for those factors? And what's been driving the gold price and silver prices higher has been investor buying based on a number of economic and financial and political problems that the investors see within their own countries, worldwide, but especially in the United States, and on a global basis. And those problems have grown in severity over the last month or so. And the concern and anxieties that investors have about those problems has risen commensurately. And we don't see those problems getting resolved anytime soon. In other words, what I'm saying is those factors that have been driving gold and silver prices higher remain in place. And that's been our projection and expectation for some time. Our expectation has been that these things are going to continue to be problematic, not just for the rest of this year, but through 2026 and possibly, if not probably, into 2027 and possibly even beyond. We are in a secular bull market for gold, and we expect that to continue. Within that secular bull market, one has to assume that there will be periods of time of profit taking by shorter term investors and longer term investors who say, hey, I'm happy with $3,640 or whatever the price may be. There's a tremendous amount of bullishness that you're seeing right now. The promoters are going wild with it. You have to understand the price was $3,300 2 months ago. The price spiked up to $3,500 in the last week of August, last week. It's been above $3,500 for 3 days. Now, you have to be cautious and expect that there could be pullbacks. Question is, where does it pull back to? Our view is that you could see the price fall. 3,400 is not out of the question. Investors will take that as a buying opportunity because those long-term economic and political factors that are concerning them are not going away and are not being resolved. They're getting worse. And that's going to continue to stimulate investment demand for gold and drive the price higher. Today we saw the jobs report. It was very weak. that suggests that we will see a interest rate cut. The precious metals markets, gold, silver, and even platinum have reacted to that. Stock markets and bond markets are also reacting to it. And that kind of is going to continue. We have repeatedly told people for the last several years, be careful what you wish for, because the Fed will cut interest rates when it sees significant economic problems that are pointing toward a severe recession. And that's what's happening right now. So gird your loins and be long gold and silver on the long-term basis, but also look for our shorter-term opportunities to take some profits. Silver prices got up to 41.86 after the jobs report came out. It was around 41.30 before that. The price has spiked up. There's a tremendous amount of bullishness. You hear the promoters talking about $70 gold, silver, etc. I'll show you some data in a second to suggest that the price could easily come back down to $40, and it could in fact come down to $38 or $39. So there is some short profit opportunities. We're seeing a lot of investors staying long silver because of those long-term issues, but buying puts to capitalize their gains and possibly take advantage if the price does fall back to $40 or $38 or $39, which is quite possible because, again, you've seen the price move from $39 to $41, $42 over the last 3 days. And it's all been in the last 5 days. If you go back 6 trading days ago, the price was $39. Do you think that the price could go back to $39 in another 6 days? You should, because it's quite possible. You've seen a short-term spike. That spike had to do with expectations of interest rates. It had to do with political and financial crises. It had to do with saber rattling in China by the Chinese. It had to do with continuing economic and political dysfunction in the United States, in Europe, in Russia, in China, and other countries. You have to be concerned and not too bullish on a 6-day bull market. Now, if you look at it, one of the factors that's been at play at silver is that September is an active contract month. And if you go back to August 29th, last Friday, you saw registered inventories of 200 million ounces and total inventories of 518 million ounces. Go forward to September 3rd, the data that was released yesterday, and you're down to 195 million ounces in registered stocks. But total is up at 517. So you've seen a reduction in registered stocks, but it's been mostly a shift into those eligibles. And you can see here, if you go back to June 30th, registered stocks were 190, and total stocks were 499 million ounces. And I will remind you that a lot of silver promoters were saying the silver market was about to collapse in June, and then in July, and then in August, and now they're saying it in September. It is an active month. In the first delivery day, we saw 7,000 contracts worth 38.5 million ounces delivered. These are futures contracts that were delivered. Through yesterday, we'd seen 10,000 contracts representing 50 million ounces. And you hear the arm wavers on the internet say 50 million ounces of metal delivered. Oh my goodness, oh my goodness. I'll get back to that in a second. COMEX open interest is down to 8.9 million ounces in the September contract. The roll from September to December is basically over. There's 8.9 million ounces left to go. December open interest is now up to 668.8 million ounces. And again, 8.9 million ounces. And you have 195 million ounces to cover that 8.9 million ounces. So once again, the roll is not going to necessarily sustain the prices that have spiked up during the roll. And this is, if you look at deliveries, I've highlighted the active trading months. And if you look at the deliveries of futures contracts during active months, 29 million ounces, 33 million ounces, 33 to 29 million ounces last year, till December, 47 million ounces, 82 million ounces in March, 78 million ounces in May, 50 million ounces in July. And each time you saw that massive delivery, you saw the silver promoters say, oh my God, this is it. All that metal's going out of the market. People are taking their metal and they're going to pull it out. And yet, the inventories are actually higher. They're at record levels on COMEX depositories, and the registered open interest is at record levels. This is not a crisis. This is a market that is seeing increased demand on the part of investors and others. So be careful. Now, there's also people still talking about the liquidity situation in London, which really was occurring in February, March, April, May. It's passing. And you can see there was a spike down in the amount of silver in LBMA registered depositories within London. And it has risen from around 711 million ounces 4 months ago, 5 months ago, to around 778 million ounces at the end of July. We don't have August data yet. It hasn't been released. So the liquidity squeeze, or whatever they were calling it, that was occurring in London is passing. It's not anything to keep an investor up late at night, either worried about the state of the silver market collapsing or rubbing their hands with glee because the silver price is going to be $70 or $100 or $700 any moment now. Turning to platinum, platinum prices spiked up June, July. They came back off. They have risen yesterday and today on a variety of issues. And as I said, the price did spike up. It was below 3,400 before the jobs report came out. When the jobs report came out, the price spiked up to 1,400. There is a lot of speculative interest in the platinum market that did not exist prior to June. And it hasn't gone away because the price action in the 6 weeks from the beginning of June into early July have demonstrated to speculators that there are short-term profits that can be made in platinum. Platinum price may not get back to where it was in 2007, 2008, or even 2011, but there are short-term opportunities that futures and options investors will trade on. A lot of that was speculation about, oh my God, the surge in platinum imports into China in June, April and May and June. There were platinum promoters who made a big deal out of that. You can see that it did rise sharply in that period from very low levels in January and February of this year, when everybody sort of stopped and said, what's the Trump administration going to do? And that surge in April, May, June was back to levels that you saw in March, April, May of last year. In July, imports were 40% lower than they were during that May high, and they were down 22% from July 2024. So again, it's not a crisis. It's not a catastrophe. The platinum market's not being broken. The Chinese government and the Chinese fabricators are not surging into the platinum market. Take a deep breath and think about this rationally. Palladium also rose in June and July. It came back down. It's interesting because we did not see a bounce in December NYMEX palladium prices this morning on the jobs report. Gold, silver, platinum rose sharply. Palladium was basically unchanged from 7:30 in the morning until 9:30 in the morning. Our expectation is that the price of palladium will drift lower because it's an industrial metal and its major use is in auto catalysts. And a lot of people don't buy cars when they're losing their jobs and the country is going into a recession. Now, 2 cautionary notes for investors. First one is investors should ask themselves, and actually they should ask their brokers, and they should look very carefully at their account reports. If their metal is allocated, is stored in a depository, and if it's allocated or segregated, to whom is it allocated? We have seen times when the investors were being charged because the metal was allocated as opposed to unallocated. So they were being charged by their brokers, not the depositories, but by their brokers for having allocated metal. But when you looked at the allocation was to the broker and not to the investor. That doesn't protect the investor if the broker has financial problems. If you want to have your metal in a depository on an allocated basis, you need to make sure and insist with your broker that it's allocated to you personally and not to the broker. Something to watch out for. The second one was a little bit more interesting. It's kind of a broken record for me. Where do you get your investing advice from? Do you get it from marketing groups that are paid to market and sell precious metals to investors? Do you get it from brokerage house analysts who rely on that free research that the marketing groups supply them? Do you get it from market gurus who, quite frankly, have been wrong all of their lives? Or do you get it from a research company like CPM Group, which is paid to get things right and not to be permabulls and has a pretty good track record? In other words, in the vernacular of the common folk, who's your daddy? And speaking of that, this week's diluted one, MW commented to an earlier video either this week or last Friday. If I had listened to you, I would have sold all my silver 3 years ago. Thankfully, I don't value your opinion. MW, that's great. Because 3 years ago, in September 2022, CPM Group, the silver price averaged $18.84. This chart here is from a report we published on the 12th of September 2022. And it says CPM silver supply, demand, and price 10-year projections. That was the name of the report between 2022 and 2031. And on page 10, we had this chart. And you can see that back in September of 2022, we were saying that we thought the silver price would rise from $18.84 to average $36.85 this year. Right? The average through August has been $34.34. So we're pretty much spot on. So MW, if you had listened to me and then thought that I was telling you to sell all your silver, that's the definition of functional illiteracy. You know, I assume you weren't listening to me, and I assume you didn't do that. And even if you were listening to me, clearly you didn't understand what I was saying. Or you're just so deluded that you'll say that kind of stuff. Or you're just ornery and you want to see your initials on our thing. That's all I have for now. Take care of yourself. Take care of people around you. Try to do something good for the world this weekend. I will be back on Tuesday. And you can go to our website. You can buy our gold, silver, platinum yearbooks. You can subscribe to our precious metals advisory or buy a single issue. The September issue was released last night. It has projections where we think gold, silver, platinum, palladium, and rhodium are going over the next 3 months, averages and ranges for the next 3 months, and where we think it'll go, these prices will go over the next 8 quarters on an average basis, as well as massive amount of information about what's really going on. I showed you a table of deliveries. That's from the Precious Metals Advisory. I showed you a chart showing silver inventories in LBMA. That's from the Precious Metals Advisory. Quite frankly, the front section this month, as well as the textual discussions of gold and silver and platinum and palladium, are exceptionally good. The world is in an incredibly difficult spot right now, economically and politically, and that's not getting better. And that's very important for investors to know if they're interested in gold and silver. Again, have a good weekend. Take care of yourself. Take care of those around you. And we'll talk to you next week.